right, let's get into it. Where we at? 10:36, 2nd of October. Gee, forgot what month, even though I'm looking at it for 1 second there. So yeah, the problem with the sort of some of the late night sort of trading in that you feel a little bit gronked in the morning, but a couple of coffees deep, bang, we're ready to rock and roll. So look, I'll start off with Aussie. I'll try and sort of chop these ones a little bit quicker today. So before I actually get into the chart, you got to sort of look at sort of what's happening. We see a little bit of an escalation in Middle East overnight, and from early sort of I say early accounts, the sort of like what I've what I've seen on the mainstream news. Not to sort of put the tinfoil hat on by sort of saying it's the mainstream news, but from what I've seen from it all, seems like Iran shot a bunch of missiles into Israel. Israel used their Iron Dome thing. They shot down a bunch of them. Supposedly no casualties. Iran saying it hit 90% of the targets. Israel saying no casualties. It seems that sort of reports of sort of US markets overnight, sort of bad day, but not terrible. Sort of dropped a bit, but then sort of paired some of the losses when they realised that there weren't really sort of mass casualties or anything like this. So the Middle East situation, I think, is a little bit interesting because it's like the big ones that we've seen in recent times. Obviously, the Ukraine kickoff. We've got when the Middle East situation first started. And even the last couple of days, I've been sort of touting and saying that, look, I think that the market's moved on from the Middle East. Of course, these things, the markets are a fickle thing because they can change, like as I was saying, just overnight. So there's no sort of set thing to sort of say, okay, yeah, the situation. I don't factor in, I don't report, I don't really follow where that sort of situation is at, and it's not my job too. My job is to sort of see how the markets react to this kind of news. And as it was happening, as I said yesterday, we had sort of gold. Gold actually had a fairly recent, decent day yesterday. But again, it was, I felt, and I sort of said that I thought it was sort of moving more off the sort of, US dollar movements opposed to sort of like escalations in the war and all this kind of sort of stuff. Because, as I said, in recent times with the Ukraine thing and with when the Middle East first kicked off, then you saw things really take off a little bit more. But I think at best it kept gold a little bit buoyant overnight. Certainly, sort of like it broke up higher, but it broke higher mainly initially on the US data we had coming out. So we had the jolts. It was a bit of a mixed bag of stuff. So we had, I might as well sort of show it as well here while I go through it. So I'll refresh this. But we had, yeah, a bit of a mixed bag of data towards the end of the night because we had jolts out here. And as you can see, it's quite a big jump. Even sort of expected down. What was it revised from? Revised up, expected to go down, and a considerable little jump up, 300,000 or 400,000 jobs more than expected. So again, you got to weigh these things up. Does this bit of data, and with all these sort of bits of data, particularly with the US, because that's what drives the DXY, which in turn flows on and affects everything else, is it falling into the dovish or is it falling into the hawkish camp? And also you need to be aware of what does well, I mean, dovish and hawkish always mean the same thing, but you would probably may have heard the term is good news good or is bad news good, and it depends what they're trying to do with the rates and that at that time. So you can get the same bit of data or in the same direction, for instance, like 6 months apart, and it can have very different reactions on the market just based on what they're trying to achieve at the time. But here and now, sort of, you're thinking, okay, sort of, do they need to cut more? And the idea is that sort of if you get strong data that, we don't need to give it such a pushing helping hand, and, maybe we don't need to do another massive cut. Because that's the talk. Are the Fed going to do another 50 base point cut, or are they going to sort of either sort of pull it back to a 25? Are they going to see, I don't know if holds on the table. I think pretty much it's a 25 or 50 again. But the thought is that sort of if you get these big job numbers and there's more jobs opening up, well, that's a flow-on effect, and the people are a little bit happy because they're employing more. So that's a bit more of a sort of a bit of a hawkish kind of bit of data out there because they don't need to sort of cut to sort of help stimulate the job openings. That's what jobs are, job openings. Um, and then on the flip side of it, you've got manufacturing marginally. It's still below 50. All these ones are like sort of baseline 50s. So, you know what I mean? Above 50 expansion, below 50 sort of contraction, but of course, you know, it's moving in the right direction. Only a margin will go up here, and, you know, as it's on this website, before it's actually marked as a certain medium strength to the data. But when this came out, it got crushed. It was all price of it. I don't think gold was really super effective in this area. I don't think I really got a sort of just a push around from it. But actually, you've got a positive data here. You've got a positive data here. I think the side of that, as the jolts were coming out, you got the ISM manufacturing PMI, and these ones were negative. And so this is why I say it was a bit of a mixed bag, and the reactions pretty much dictated that as well. So we didn't see a rocket move and it just stuck it and just kept going. We really saw a bit of up, down kind of sort of stuff. And yeah, this is where it sort of gets a bit interesting because you got to sort of think, you know what I mean, which is the real one? Like, I mean, which are they going to sort of stick? Are they going to keep continuing to drive DXY up a little bit higher, or is that it? Have they done the big push and they've sort of and they're going to come back with it now? So, yeah, I mean, these are the sort of lower tier, although you know they're marked as the high tier, whatever. The lower tier bits of data coming out for this week. So the big one obviously is NFP. Like this stuff's part of the puzzle, of course, but it's not as it doesn't hold as much weight as NFP, and NFP is what we're really holding out for this Friday. We've got ADP tonight. So actually, I might as well flick through. There's still China. I think they're on bank holiday all week. So ADP is very low numbers. Like for you know such a large economy or such a large population, that's very small. But again, expectation is a little bit up. Market will, like, you know, whether this is a real number or not, market will price for this because this is what they trade off. So, you know, this should hold US dollar a little bit more firmly. And then we got a couple of talkers overnight, a couple of things, unemployment claims. This comes out every week, and that again, that's ticked up a little bit, but only marginally. And then NFP. So NFP looking to come in at this stage fairly flat. I don't know if these expectations change a bit sort of through the week. So we'll have to have a little bit closer look at that. So that's a bit of an idea of the landscape of everything at the moment. So we'll flick back on. So start off with Aussie here. So with Aussie, we can see really, as I said, took a hit when that first bit of data came out. And if you've been watching what I was saying, we're saying that sort of like this is the area where we're expecting to get that sort of reaction. It's the horizontal and also it's the bottom of this channel that we've been respecting since that pullback. So you know, start of September, so 3 weeks. Geez, only 3 weeks now. But you know, you can see it's been very bullish, very bullish. Question now is this enough of a break that we're going to see a correction to the downside? Or are we going to say, okay, well, you know, maybe it's a bit of an overshoot, it's found support, and it's going to rally back up, and we're going to be, you know, testing above 69, potentially going up to 69.80. Look, I do believe this number here is coming, a 69.80/70. It's just a matter of whether they go down before they go up, in my opinion. So that's where we're kind of at the moment. Look, I took a lot of profit through this part here. I took a lot off based on, you know, what if you look at the plan over the weekend, that was it. Short Aussie down into this zone down here. Expect a bit of a push up. Expect a push up here. This is, I mean, literally, if you go back and watch the videos, this is what I was saying. That, you know, we come down here, find support here. This actually dropped down a second shot down here. But as it came back up, these are the little paths. Remember, these lines here aren't necessarily like dollar amount necessarily, but they are the general path that we're expecting. And, you know, as we've got these arrows here, this is where we're expecting sellers to come in because this is what we've seen previously. We're seeing the sellers come in around this zone, and they've done it again. So I think the point right now is to sort of see if we can get above, look, not even above this week. I'd want to get realistically above, you want to see a close back up 69.15 or so. Where we at now, 68.86. So 30 points. You'd want to see a close up around here to sort of say that, okay, maybe this is a support area and it's moving back up to the top side over here. But you're certainly getting lower lows and lower highs moving down through here. So it's not about to sort of say, okay, yep, it's just going straight back up, particularly with this stuff escalating at the moment. So let's make this a little bit thinner. See how this reacts through here. Um, where we are, so 10:46. So yeah, a little bit of volume coming in a little while. So these sort of times around here are a little bit wish-washy. We are getting a bit of a rollover. You can see this here at the moment. In terms of sort of this last sort of kick up around here, I think we bounced off the 60. Yeah, you can see this one here, sort of through here. That's the 61 that held through this area. It's bounced, it's come up, found resistance where we expected it to. Now we've got to see where is it going to go from here. I think the big things that you're kind of looking for are outs. Look, honestly, as I said, I want to see for longs, comfortable longs, you'd want to see back well into the 69s. But I would say for them right here and now, that's the kind of area you want to see a move outside to sort of see which direction you're going to take. Are we going to take out the wicks from yesterday? Um, which are the lows, which where we come down to. I think it got last off around the 55s. So there we go. So are we going to come down here? Are we just going to sort of chill around in this box? I mean, this area here, we've got it marked out. So if we zoom out a little bit, we can probably sort of see a little bit more as to sort of where or why we may have found support in this area. And you can see that, this was a sort of point of resistance previously. I mean, this is going back to December, December highs. And we've sort of found a little bit of support, bounced off up here. A little bit oversold, well, very oversold on the 4 hour. But I would say pretty much this little sort of candle here, this 4 hour candle, I would say above, look, that's pretty much right on 69. So above 69, I think we could see a little bit of a push back up. If we take out 68.57, call 68.50, I think the next levels that we're really kind of looking for is, it could be these lows over here, where we sort of saw a bit of a rally up, but this is a big chop area through here. Like this is the whole thing. This is the same of this sort of thing here. Are we going to sort of follow the direction of the consolidation? This isn't enough to sort of say it's a consolidation yet. There's only 2 candles in. So you know what I mean. But the idea is you're coming in like this. Are you going to V-shape, bang, push back out? Or are we going to see a meltdown a little bit further? If it does come down further, we kind of know where it's going. We're going to say around 68. I mean, again, round number. We can see in an area where markets have liked to sort of buy it up, sort of hold support, these kind of bits here. So I would say this zone down over here would be a decent area to, if you are short, take profits on the shorts. If you are trying to get long, have another shot at the sort of longs from here. One sec. All right, I'm back. So yeah, I mean, look, that's the play with Aussie. I tend to sort of feel that, given everything sort of going on at the moment, like again, look, I don't put a great deal of weight personally on the Middle East kind of sort of stuff. I think the market mostly has moved along. Oil got to jump off that, but, I don't trade oil. And as I said, look, oil sort of jumped up like sort of $5 or something. Gold didn't fucking go through the roof. So, man, and as I said, the bigger moves of the market were off the US data. So I still am in the camp that we've got a little bit of US dollar buying, a little bit of a push, which is going to be weighing on Aussie to the downside. So I'm still sort of expecting probably at least a pullback down here. I mean, if we look at this, geez, got so many lines on this chart. Have we got a fib here? We do have a fib. Bang. So if we look at where we're at, this is the big fib from the bottom here. We're sitting at the 23%. Still very bullish. You come back down to this level over here, all of a sudden we're seeing, a 100% retracement of the last push up. That also perfectly, to almost the point, coincides with a 38% pullback of this last kick up through here. We got strong supports around it, a big sort of like congestion area, sort of chop and change, support. I think this is a great area to target. The sort of 68 cents. It's still very much in a bullish kind of momentum as well, Because remember, if we maybe I've got it on the daily, this little path here, this is the move that we kind of sort of felt was happening here. You know, that 1, 2, 3 leg. You know, this leg here is a little bit too messy. I need to sort of fix these things up up a little bit. But the idea being, actually, where we at this one here, we got leg 1, leg 2, leg 3, maybe leg 4, leg 5, up over here. I know it seems crazy, but 71 cents. Maybe we see that little US dollar push, chills Aussie off here. If it comes down here, look at these other areas as well. This is like the previous highs. You know, this is an area where obviously was a strong resistance before that push back down. Maybe that's just the whole structural move. Leg 1, leg 2, leg 3, pull back here, retest the top side here. It did do a small retest, but generally with these things, I'll do a couple retests. Um, Come back down here. If this can bounce around this 38 and tackle this top up here again, like sort of come down here, grab some liquidity, and then push back up here, I think 71 is certainly on the cards. This is the big flag of that first move playing out through there. Like, I mean, as cliche as it is, things don't move in a straight line, yada yada. We know that. But certainly, I would say that we could see some. Obviously, we're still up towards. We've pulled back a little bit from being overbought. But should this continue to push down a little bit here, I would say that certainly this would be an area I'd like to sort of look to get long again. And we could sort of be looking from 68 to come up and test because remember, this is how these things work. Resistance, support, test. Are we going to get double top? For a second, it looked like we were. Broke through. So now we get higher high. Comes up, finds resistance. Comes back, finds support. Support generally, previous resistance. Support resistance, same thing. It's the same stuff on every time frame. General flows of these kind of things. Look, it doesn't guarantee that it's going to bounce here. It could come all the way down here and do it. But, as a structural sort of setup, it does actually look like, there's quite a few things coming back here. You come back to yearly open, you come back to previous highs, you come back to the 38%, you break this channel, come down here, grab the liquidity, and then maybe sort of shoot to move on over here. But for the time being, I'd be reluctant to be buying a great deal of Aussie as we're still sort of working out, are we breaking through this channel? Because we kind of are at the moment. And this is a close outside here. It's just a matter of where they jam it back up and then sort of drive it down. But for me, moving forward over the next couple, period or so, I think we see some US dollar buying, which is going to weigh on the Aussie, despite the sort of fundamental side of us being quite a sort of hawkish central bank, and sort of try to get long around 68 for a leg to potentially break through the 70, 69, 70, or 69, 70, 71 kind of zones. So that's, again, bigger picture there. It's 20 minutes just on Aussie in the news, which is obviously a little bit. So main things, again, back to today, see what happens through this zone here. If we get a close sort of down into the wick area, so a close into the sort of like 60s, I would say you look for your wick fill, and then if you break that wick, then we look for the move down here and a 50-point drop off just down to retest these lows over here at 68.20. Yeah, see, imagine saying 6 months ago, oh, we'd be moving down to 68.20. Jeez. All right, let's flip across. We got gold. And gold, as I said, this is the path that I thought yesterday. I thought, look, we definitely had some upside from wherever the open is. Open's down here. I thought, look, you know what? I don't want to buy this because, we're quite clearly coming down. It pushed up. It pushed up a bit more. It pushed up a bit more. And it just rocketed through this period here. And it rocketed through this period here, not really, I don't think based off much. Like, it wasn't sort of, this wasn't sort of when the, attacks were happening. And it wasn't any sort of news around that time, I'm pretty sure. So that was Tuesday night. No, so this is before all this sort of data came out. So let's flip back onto here. So it really kind of took off in a bit preempting it, but it found resistance where we've seen the sellers previously. So around the zone through here, and we had it marked out, and that's what happened with it all. But excuse me, this first sell down here, excuse me, this first sell down here was off the US data. So it ran up prior to the US data. Data came out, it went up and down, up and down. If you have a look at it, it's quite choppy at first. See, it came up here, then US data came out, and it was just up, down, boom. And maybe this around here could have been as the attacks were happening. Because obviously, for some reason, it's decided to shoot back up to the top, unless it's just coming up to clip anybody. The market has potentially kind of moved on a little bit from it because it's not rocketing through to the top. You know what I mean? Like it's not putting in new highs. Yes, it's stayed elevated 100%. You can't say that it hasn't had any impact on it whatsoever because it obviously has. Given the news, given the preempt of the news, we got, as I said, we got NFP coming this week. US dollar is still bearish. It's just in a little bit of a squeeze at the moment. So there's a lot of reasons for gold to stay buoyant. But realistically, if the war was the main driver, and you've just had this big lot of attacks, wouldn't gold be up testing the highs, as we've seen in Ukraine situation and when Middle East first kicked off as well? This is what makes me think that the market's moved on a little bit from it. It certainly has, it still plays its part and has an effect because it's not back down over here. But realistically, you know what I mean, it's not pumping through to the top. So it makes me sort of feel, particularly when you look at a couple of the other metals at the same time, that it's not sort of like okay, let's like gold's a little bit different because it does have that safe haven sort of status, opposed to say silver and copper, which are a bit more industrial kind of status with it all. But silver and copper both gave up any sort of gains that they got from any of that stuff, whether it be the news or any of that sort of war stuff. So, it makes me think that, potentially this is a fluff up here. And if we do see DXY take another push to the top side, I think that's going to be what drives gold back down here. It doesn't mean that necessarily, I mean, you got to respect the fact that, look, it did come through here and it wasn't a solid break, but I don't know, till you get up above these kind of areas over here, and there's sort of, I mean, it got right up into these zones. Till you get up above these areas over here, I think it still puts it in potential to see some sort of almost large range form through this area here. I don't know if we're necessarily going to get the major breakdowns to the bottom side, but it does make me think that again, I'd be reluctant to be buying. And look, yesterday I said I was reluctant to buy. I could have bought it at 25, 30s. And that's a big move. It's sort of like $50 move or so to the top side through the day. And missed the boat on that one, but that's fine. These things happen. I had a plan. I stuck to it. But as I said, I think that sort of we could potentially be seeing a little bit of cooling coming down here. Eyes really on what they decide to do with DXY. As what I mean, it's trying to squeeze up a little bit. So we'll see how that goes. Got 11 o'clock coming in now. Doesn't really seem to be a whole heap of volume sort of rocketing the market. So we'll see how we go. But look, for downside moves, it's found, this has been a sort of bit of a resistance. It's held a couple of times of support. We're dribbling down through it now. Look, it's hard to really call this one here. I would say maybe under 53. You could sort of maybe confirm a little bit more of a push to the downside. Though at the moment, it does feel like it could be doing these kind of moves where it's coming down and then just rockets through to the top side. So I'd be wary on it all. Short term, if I'm looking for gold moves, wouldn't mind seeing it just up above the zone over here. I guess you could go under here and under here. So, a wick fill, if we break 56, that's down to 53, $3 move. That's not really much or worthwhile. I think under 53, we could see a little bit more of a downside move. For now, just chopping and changing. There's not really too much to it. Top side, a close above 64, and then be targeting sort of, these highs over here, 71. But yeah, to me, it's just very up, down, up, down, up, down. Plus, when you wait, like that's from the chart perspective, up, down, up, down. But then you're sort of weighing in what they're doing with DXY. You're weighing in the sort of the war stuff. It makes it a bit of a sort of risky sort of move at the moment. Not so clear cut I mean, that's on a 15-minute, of course, so let's put it on to 4 hour. Yeah, I think that's a bit of a better idea there. So you can see obviously it's trying to pull back down here a little bit underneath this wick, which is where we said 2 seconds ago, 53. I think we could see a bit of a better pullback down here. Yeah, get her off that 15-minute time frame. Look, above 65, yeah, above 65, I think. Then we could be seeing some move to the top side here. But as I said, if you look at this as a break, it's broken, come back down to retest. It's just really just dribbling here at the moment. So there's no real sort of set direction. It does feel like, I mean, it's moving up, pulling back. Could see a push up this way, could see further pull back down here. I just don't think it's a very clear cut chart at the moment. May as well talk about DXY then, because we saw DXY sort of take off, flag completed through the night. That was good. And it did, it overshot. And if you look at this on a smaller time frame again, this is what I was sort of talking about here. It came up into this area, hit this, that's a measured move of the flag, completed this, came back down here, looked like it was failing, and charged back through. This is what DXY tends to do a lot, particularly when it's in these squeezes or it gets on these runs. It doesn't, it's quite obviously a large thing because you've got so many sort of currencies sort of mixed in with it. So it doesn't turn around on a dime. It did get above this zone that we had marked out here, and obviously backtest is held for now. I think as long as it sort of stays above sort of 101.10, and realistically these wicks down here, so 100, if you want to be super cautious. But I would say as long as it stays above 101.10, I would say the risk is for the move to continue a little bit up until this falling resistance here. I think this will be its little short-term high for now. So we just have to see how the market reacts from this point here. I mean, obviously at the moment it's just sideways, not really doing much. Looked like it had a little gap up, closed it, tried to go forward, back down. Like again, same thing with gold at the moment. It's just there's no clear-cut direction as of right now. So we'll have to sort of see how long this sort of continues for. But certainly, I think sort of top side, you're looking 101.6 to 101.8, 101.8, this horizontal through here. But downside, if it sort of fails up here, then of course we could see similar kind of things to the other times that it's broken above this level and failed, and it's just come back into the zone. And then we could sort of maybe see a bit of a push back down to retest these highs over here. Sort of as a bit of a support. So that'd be your sort of downside target, 190, top side target, 101.60. But again, it's not clear cut at the moment. So it's a bit of a risky time to be sort of taking too many positions, in my opinion. Flip across, we've got silver, and this is what I'm saying. Silver, similar thing. It got its break, but it's just been smacked on the nose. It hasn't done anything. So you know, if we sort of drag out. Let's put it onto something we can work a bit better with, a 1 hour. We can see that obviously this little area through here was resistance previously. This could, and now that I look at this a little bit closer, this is the channel that we were talking about. This is your break point around here, retested. It's come back up, it's retested again. So I think above these highs over here is where you want to see if you want to get long on silver. If you're long for silver, 31.84 above there, I think could be the case where we're coming back into test these highs at 32.30. But to me, it seems like it's tried to break out and it's just got smacked on the nose. It's tried again, smacked on the nose, tried again, dribble, 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 dribble. I think this has got more of a sort of downside move. And this is what I'm saying, that I think with all metals at the moment, I think they are going to have some cooling off moving forward. As I say, gold's a little bit different because it's got the sort of safe haven factor to it. But I think the market as a whole is going a little bit risk off as they jump back into the US dollar. And so that's why I do believe, you know, these kind of more industrial metals, copper and silver, will have a little bit more cooling to come. I think gold will fall into line and have a little bit of a pullback. And I think Aussie will have a bit of a pullback as well. And that's pretty much how I'm trading it. But certainly, look, you break below, like right on the cusp here, but you go below 31.20. It's really, to me, it looks like this is the kind of setup where it's just dribble, 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 and then you just get one big sort of rocket move to the downside here. So, maybe a 50 cent drop off or so. Yeah, I think we've got some downside in silver in the short term here. Have a look at copper. Copper sort of, geez, it feels like everything's a little bit, it's midway. It seems to be faring a bit better than silver, as we saw yesterday, but the equivalent area is this area here. As I said, it broke up, came back down, tried to go up, down, and it's just really in this little flat area. Even below here, you do have a couple of bits of support. Let's have a look what they do with this sort of thing here. For the here and now, I think like it's not a perfect triangle by any means, but we have an area. We've got two touches with the support. We've got two touches with the resistance. Generally, you want kind of three touches minimum to sort of call it a like a confirmed line. So just bear with me 1 second. But yeah, I think we do have a little bit more cooling to come with this as well. There's not really a great deal I can tell with this chart. I mean, look, I've been long copper all the way through this period here. So you know what I mean? It's not always the easiest to just go, okay, yep, nah, it's done on its head. But that's the name of the game. You've got to be able to sort of not be sort of tied to something. And certainly you can still get long on these things, but why not get a cheaper price if you can? So for me, look, if you get above this level over here, above, say, what's that, 629, and realistically, geez, there's so many levels that it could be supported through here. So this, what are we on? Somewhere. Let's go to the 4 hour because 4 hours a little bit better. Yeah, I think this is pretty much what you'd be looking for. This little zone through here seems a little bit more clear cut. I think you go above over here, you take out that sort of pump up highs. Look, you could be coming back up over to these zones over here. Downside, I think below sort of 450, then you're looking at obviously those lows from the drop off, and then we've got the next lows down there. So look, there's a lot of areas of support down here. So this is when I see a lot of areas of support and a lot of areas in which it could sort of be targeting, it makes me reluctant to short it and more to sort of look that, I mean, we're in a very bullish sort of momentum. Why try and sort of short something for, peanut moves? It's much better to wait and let this thing cool off, and get long, and then stick with that main trend. Even if you're doing a swing trade, even if you time that entry wrong, well, at least you've got the main trend on your side, so you're not sort of fighting against the grain. So yeah, for me, I'd pretty much again be sort of holding it. Seems very much like this. When you look at all these charts and you go from chart to chart to chart, everything seems a little bit choppy at the moment, and I don't know, a little bit sort of reluctant to sort of jump in too much with too heavy with too much stuff. And finally, finish off with China. We've seen a little bounce up with China over here. Look, it's found resistance in line with sort of its previous sort of highs through here. So look, I'd probably be happy to maybe even update this a little bit, but I would say this is, if you want to see a weaker Aussie, you want to see a continued push with China here. Look, even if this were to sort of move up, it's still a very strong downtrend. But we could be seeing two things here. We could be seeing an inverted head and shoulders with a kind of double head thing here, but pretty much down here, it comes back here, holds that 7 level again, and then moves up. Or if we break above this immediate little area here, we could be seeing a move up to the top side of resistance of the channel. Either way, I think we have some downside till we sort of break this channel coming through here. We are quite overbought and rolling over, so it does look like it's sort of going to be coming down here. But again, let's see what the market does, because as I said, I do believe that US dollar is due for a bit of a push, and you're going to see that reverberate through the markets. We're going to see equities pull back a bit. Risk assets, Aussie, going to take a bit of a hit. Your metals, like your industrials, have a little bit of a pull down. So that's still the direction that I'm pretty much sort of jumping in the camp of. All right, that's it from me.